Good morning, traders. Welcome to the new short summary of the day. Today I took one trade. It was a buy, and also I was looking for a sell, but I didn't take this one because of what I read on the footprint chart. So today's video will be a bit more about footprint. And as I seen on the Discord chat, Randy and Jeffrey took same buy as me, as I took. So very nice, very good view. So my bias was at first buy because price was sitting on the 4-hour demand zone. Take a look how I drew this. This is especially for new members. Here we have indecision candle and huge leg out. There was a lot of volume, so it made the demand zone, especially that price was sitting here. So I was waiting for good signs to take a buy. It was for me more than obvious to take what I took. So this is the 4-hour time frame view. Also here you can see the imbalance box, the imbalance pool from this week to this week. When I zooming this in, you can see that this bullish candle, the wick, didn't touch with this one, right? So here's the imbalance. In this small tiny pool, there were more sellers than buyers. So even without footprint, we could draw this. And also this huge indecision candle with this leg out made a 4-hour time frame supply. So it was nice 20 pips or over 20 pips distance to look for some transactions. But as price was at first sitting here, I was looking for a buys. So let's switch to the M1, how it was. Yeah, it was here. That's the beginning of Frankfurt and London session. So yeah, let's start. Here, this is for me the support with equal lows, and it is made above the demand zone. So for me it was the sign that price can potentially go down to take this liquidity. Because what liquidity is? The price is moved by big banks and their pending orders. So if they see that probably retail traders are seeing this as a support and double bottom pattern, they were probably starting here their buy positions as an early buy. So where they placed their stop loss below this area, below the double bottom pattern. So what the big guys are doing, they are setting the pending buy orders below their stop losses. So here and here and here, every tick, every next candle, every next minute, they are doing the pending orders, and this is creating the liquidity. So the price went here to for 100% sure the all stop losses from early buyers. So we are executing the market by market execution, right? Without pending orders, but the big guys are doing their trades by pending orders, because they want to, like a magnet, they want to see the price at their entry. And what was also interesting for me on the M30 footprint chart, because I'm experimenting with this time frame also to see more data, I found here almost nearly the closure of London session on New York session on Friday. Here the big sells, right? The trapped sellers. So by marking this, of course here after all I see the nice reaction, but it was my point of interest. Then on M5 I was waiting because probably here were the the biggest pending buy orders left by banks, right? So it was here, this was this level. So they were sure that the early buyers from here, the retail traders, were taken, they were manipulated, and while they when they seen the big drop, they probably wanted to recover their loss and to join the sellers. So what happened? Here was the click, closure of the trapped sell orders from Friday, and here was the push to the upside. This push here made a imbalance, right? Here's the imbalance pool, 8 buy contracts with 0 sell. It is nice that here appeared the first buyers, and also on top of this candle were also buyers, and they pushed the price really nicely up to the supply. Here we have supply. What I'm mentioning a lot of time, I don't trust the candles which have a lot of imbalances, like this one. These are holes like on the cheese, yes. So I don't trust this because it is hard to choose where probably the sellers want to click to fill their imbalance to join the main sell order. So I don't trust this, and I was really focused that this is just the liquidity grab move. Especially if I have on M1 markup like this one, big demand zone and support above the main area. Then could be a little bit confusion, because this whole move is a compression. This is also all in the course, right? This is the move to the upside with indecision candles and strong push to the up as the last one to click at the to fill maybe some orders on this supply. Yes, here we have supply zone with a sell, with a big drop. So it could be potentially looking for a sells. But what happened on the footprint chart, I see only the sells at the beginning of the bearish candle. So it was the sign that it is not probably not a long-term drop. Yes, it would be totally different if here at the bottom would be also at the closure of this bearish candle also some huge sell orders. As here, right? Here was the big buy on closure of the bullish candle, and the price was really continued the delivery to the supply. But he was only on top, the huge massive sell contract. So I wasn't focused here to join the compression because I found here the buy pressure. From bigger picture, right? We are on the demand, so I would not look for a sell just 10 or few pips above my zone. And honestly, it was very aggressive entry because I joined the market with high volume. The volume didn't decrease, but if I see that last supply was broken, there's compression, but only sellers were here on top, I just joined the market. I clicked directly. It was 2 or 3 seconds before closure of this candle, so really could be dangerous, but for me it was what I wanted to see. And I was aiming for the previous equal highs as here. The trade could be held to this imbalance pool, perfect reaction. But I'm always fighting with my greed. I don't want to catch less than I could because of big want to see the money, right? So I'm always aiming for previous supply while buying, or from previous to the previous equal highs. And this level was for me kind of safe logic, because I could expect the push because those equal highs were made below the imbalance, below the bigger 4-hour supply zone, which is above this pool. But it was 20 pips. It's more than enough for me usually I'm aiming for between 15 to the 18 pips. So 20, it was for me perfect distance. It was just 8 minutes trade without any stress, without any dangerous pullbacks. So not all compressions are signed to join the market. Yes, he was, even if not on the footprint, right? Even if not reading that the sellers were strong only here at the beginning of the move, not here. They were losing their power a bit, of course. Here the entry was very aggressive. But the signs to join this compression just above the demand, just below this equal highs, here was also liquidity. This would be dangerous. So then, when price was somewhere here, I was looking to take maybe a sell position, because here is very similar pattern as here, right? Great compression, indecision candles to the upside, and huge last push to the upside, the big engulfing candle. So looking for a sell was really safe here because of supply, because of imbalance pull, good pattern. But what happened here on the M5 footprint? The first thing, it was the first touch with the imbalance pull, the cheesy candle, right? A lot of imbalances, a strong push as a sell signs at the beginning of the candle and also at the closure. So here could be really potential signs that price is ready to make a drop, but the push wasn't continued and here were too many imbalances. So I left the setup and was waiting more and more and more, and here was the last push from the compression to the supply and to the imbalance pull once again. Last strong push. And this one, next candle, is the reaction, the seller's reaction. Yes, as this move here. It looks like break of structure, but was here the imbalance to join the sellers? I didn't find the imbalance. Only strong sellers at the bottom, but the price continued the move to the upside. There wasn't any continuation of a drop. So the compression was invalid. So please guys, take a look to the footprint to the safest joining the market is from the imbalance with 0 contracts or really big difference on the clusters. Here looks like on the M1 that this is the break of structure, the break of this demand, the last demand from the last push to the upside after compression. But this demand holded the price. Even if the baseline from here was broken, there was no imbalance. So could be very risky to join the market right now. So this is how I read the footprints. So today the new thing is to take a look on how the sellers are reacting, how they are moving the price. But don't really forget guys that the biggest zones should be a sign to what to look for. Is I would not look for a sell above the demand, just few pips, or I would not look for a buy somewhere here when I see compression to the supply. The patterns, please try it, practice a lot, because this all requires just a practice. After a time you will see this by naked eyes, without any stress. We need just to read, just to draw the zones correctly. I hope that this video gave you something, and thank you for watching. First time so short video as less than 15 minutes. Thank you guys, and see you tomorrow.